All righty. Good afternoon, everyone. How you're doing today? Hey, Proof Jeff, how you doing? If you can see me all right, you can hear me okay, put it into the chat, let me know. Hey, Brandon. Hey, Mikkel. Hope you're all well. How are you doing? Hey, Jayam. Give it a couple of minutes before we get started. Welcome again. Thank you all for turning up nice and early. Today, we're here with Vantage doing a live trading session, live analysis, looking at the markets. A lot of news to be had for this week coming up. So it'd be quite interesting with the possible trade ideas, possible trade setups. Looking forward to it. Looking forward to share with you all. Again, if you have any questions, any trading related questions, please feel free to put it into the chat and let me know. And if you are joining us from the other streaming platforms, any other streaming platforms, drop it into the chat, let me know. Say hi. And what I'd like to do is, as well, while we're waiting a couple of minutes for everyone else to stream in, put it into the chat, let me know where are you joining me from. Hey, Steven, how you doing? Super, France. Fantastic, Mongolia. What about everyone else? Alrighty, one more minute and then we will get started. Thank you all for putting in where you're joining me from. Good to see that we've got a lot of people from all different places, all around the world. So good to see you all. Thank you for attending this session here with Vantage, a live trading session. My name is Jindal. There is quite a number of news to be had for this week, so I'll be happy to share with you some possible trade setups, my views and opinions, ideas on where prices could be heading towards. All right. If you do have any questions at any point in time, please feel free to put it into the chat. Let me know. I'll be happy to address your questions as we go through this session. With that said, let's get going. As usual, before we move on, quick disclaimer. The information, context, and opinions which are expressed in the presentation and in the following slides are solely those of the presenter and not necessarily those of Vantage, and are solely used for educational purposes, as they do not constitute investment advice and or consultation on how a client should trade. Vantage does not guarantee the accuracy or reliability of the information provided herein. What it means is that I will be sharing with you, my views and ideas of where prices could be heading. Please make sure that before you jump into any trade, check the prices, check that the idea fits with your own trading strategy. Make sure that it works with, what you're comfortable with trading, and also that you have entered, or you will be entering a trade at the right leverage. You're not over trading. You're not suffering from margin requirements as well. Okay, so with that quick introduction of the team of analysts here, my name is Jin Dao. Most of you will know me as Jin. I've been trading for, I always say 10 years, but it's close to 15 years already. Through the market, different market cycles, global financial crisis, COVID periods, different wars. It's been quite an interesting trading journey. So I'll be happy to share with you my points of views and different analysis as we get through and look into the markets. All right. Take that aside. So if you're familiar with the way I've been trading, right, I do approach the markets a little bit differently compared to most other traders. A lot of traders I've come across pay most attention to just the way the price moves on the charts, right? While I do look at charts and price movements and price action and indicators, before I get started with my trades, I always check out the news, right? I always check out the fundamental analysis, looking at what happened before, what's likely to come soon, and then based on that, develop my overall directional bias across all the different currency pairs. Then I'll look into the charts, and if it aligns with my directional bias, then I'll look into getting into a trade. If it doesn't align, if it's different to what I expect to see, and then I'll wait for price to actually bounce back or move towards the direction that I expect to see before I look to get into a trade. All right, so we'll go through a couple of examples here, real life examples here as we look at the news first, and then after that into the charts and the possible directional targets that we could be looking for. Okay, so what has happened recently, scrolling back a couple of days, on Friday last week, we had very strong US economic data, preliminary UOM or University of Michigan consumer sentiment. It was a 56.8. It was actually revised up from a 54.7. Expectation was a 56.9, so an increase there. But what we actually saw was a big increase at 59.1. What this means is that we actually saw consumers in the US being relatively positive about the economic situation in the US, right? So we saw it as being relatively positive. They were looking to spend or willing to spend because it's a positive or an increasing consumer sentiment. That's a very good data because it shows somewhat of a resilience in the US economy, despite the recent rate increases from the Federal Reserve, right? Despite the US Federal Reserve increasing rates quite aggressively, we have seen the US economic data being quite positive, which shows that, it's not suffering or it's low chance of suffering from a significant slowdown. Okay, so that's quite good news there. And because of this good news, we actually saw the dollar index strengthen on Friday. Okay, so I'll show it to you here on the charts. On Friday, the dollar index is on H4 time frame. Show it to you on H1. You can see on Friday as the news got released. Before the news got released, it shot up. Once the news got released, after that, it ended the session higher, right, towards that 105.20 round number or interim resistance level. Right now, the dollar index is dropping towards the downside, right? But I'll update you on that shortly. Okay, so we saw that move higher because of that stronger data, which we saw on Friday. Following on from that, today we just had by 3 o'clock GMT plus 8, right? We're in Singapore here, so GMT plus 8, the pound GDP number month on month, it was a minus 0.6%. It's expected to come out at a 0.4%. What happened was it came out at a 0.5%. So better than expected and better, definitely better than previous. Okay, so how I would look at this is that as the data gets released, this would tell me that we should be looking at some upside on the pound dollar, right? Because of a strong GDP number, some upside on the pound dollar. So if we look into the charts, look at the pound dollar here on the H1 time frame, you can see that this was the news at 3 o'clock. I'll put a vertical line at 2 just so that you can see it easily. At 3 o'clock, when the news got released, we saw price bounce from this 1.2220 level up towards this currently at 1.2270 or 7172 price level. Okay, so what we actually saw was that because of that good news, the pound dollar actually went up by close to 45 pips just because of this news since 3 o'clock to now at 5 o'clock. So within 2 hours, a good 45 pip move towards upside. This would mean that because of this news, and you can see that there are no other big significant news for the rest of the day, what I'll be looking for in a short-term intraday kind of trade will be whether the pound dollar could continue trading higher towards that near-term resistance level. Okay, so resistance level I'll identify here. From the last time it hit this swing high and turned back down, right? This was on the 5th of December last week. We saw price hit this level and turned downwards. Okay, so at this point, because of that good news, I'm looking to see whether price could trade up towards this 1.2335 resistance level. The near-term resistance, which is moving right now, okay, which is moving right now. If I were not on this session, I would be looking to be buying as it breaks above this recent high point. About a 55 pip take profit, right? Stop loss, I would say about a 30 pip stop loss, just in the middle of that candle, or you could go for that low point there. You're looking at a 1:1 or a almost 1:2 risk reward ratio towards the upside, towards that key resistance level on the pound dollar. Okay, so very quickly, that's a quick possible intraday setup with that move up towards that resistance level, just driven by this news here on the GDP for the UK, right? And this is even after the move, the first 2 hours move, which we saw a 45 pip move towards the upside. All in all, if you did jump into this trade before or at the news release, you would be looking for that trade about 100 pips towards the upside, stop loss about 30 pips, a 1:3 risk reward ratio towards the upside on the pound dollar. Okay, so that's my view on the pound dollar for the short term. There are a lot of other news to be released in the next couple of days, so I'll show you about that shortly. Okay, I see a question about the German index. I'll get to that shortly. Just hang on there, wait it out. So with that said about the pound dollar, that was just happened a couple of hours ago, and we've seen that move pushing it towards the upside already. With that, what else could happen for the rest of the week? You can see that on Tuesday, tomorrow, we do have employment numbers, claimant count change for the UK. Claimant count change is the number of people claiming for unemployment benefits in the UK, right? Claiming for unemployment benefits. So the smaller the number, the better, because the less people claiming for unemployment benefits. You can see previously it was 3.9. They expected a big jump in November, 17.3, but we actually saw it drop to a 3.3. Right now, 3.3, again, expecting a small jump to a 3.5. What we could see is this coming down tomorrow, maybe to a 3 or, a positive number here, a good lower number here, right? So again, that could give some strength to the pound dollar, but I don't think that this will move prices too much at this point. Why so is because on Tuesday, apart from the pound or the UK employment numbers, later into the night on Tuesday at 9:30 GMT plus 8, we do have the US CPI data to be released. US CPI data is an inflationary data, right? And the US or the Federal Reserve has been working really hard, increasing interest rates quite aggressively to try and bring down inflation. Currently, it's at 7.7%. Expectation is a 7.3%. So a slowdown in CPI or slowdown in inflation growth expected. And if that does get released at about 7.3 or 7.2 number, that's going to indicate that the recent rate increases from the US is having an impact. Right? It's having an impact on slowing down inflation growth, which would be a good thing, that could give the US Federal Reserve more confidence to continue with their rate increases, as it shows that their rate increases are having an impact. Okay, so I think that with the employment data from the UK to be released at 3 p.m. tomorrow might not move prices too much, because there is a bigger news at 9:30 on the US that could strengthen the US dollar quite significantly, especially if we do see a positive inflation data being released. Apart from that, we also do have a lot of other news between these two big events. We do have the FPC, which is the Financial Policy Committee, their statements and their minutes being released. And also we have the Bank of England's Governor Bailey speaking, which could move prices. All right. So quite a lot of volatility here tomorrow. Focus will be on the pound dollar. Anticipation is that we might see from tomorrow some brief upside, but then later into the US session, we're going to possibly see that US dollar strength come back into play. With that, on Wednesday, we do have some news on the Aussie and the Kiwi, but the focus again back to the pound. All right, so you can see here that this week should be a big, heavy week on the pound dollar, because on Wednesday at 3 p.m. GMT plus 8, again, CPI data to be released year on year for the UK. Again, looking like a bit of a slowdown, right? The impact of the Bank of England's rate increases is taking place. Inflation looking to drop slightly from 11.1% to a 10.9%. So a small drop in this case will be quite positive for the pound dollar, because it's showing that inflation is not sticky to the high point. It could actually slow down with the rate increases. So look out for that. Again, going to bring some volatility to the pound dollar. But I think that this would be short-term volatility here. So you can see that what I'm looking at over this week will be shorter term trades, intraday trades, because there's a lot of news. There's a lot of news that could increase volatility quite significantly. What it could happen is it could trigger your trades, fluctuate you, hit your stop loss before continuing on. So keep your trades relatively short term, keep it within the intraday, take advantage of the quick moves, get out, and then reevaluate again. Hang on a second. So with that, the big main event comes along on Thursday, right? On Thursday, sorry about that. on Thursday at 3 a.m. GMT +8, early in the morning here, US Fed funds rate. US Federal Reserve with their interest rate decision looking to go from a 4%, 50 basis point increase expected to take interest rates to a 4.5%. Right, so a 50 basis point rate increase expected here to take interest rates to a 4.5%. This would be pretty much priced in. This decision would be pretty much priced in. The question here will be, is the statement and the press conference coming from the FOMC, is it going to indicate or identify the next steps from the Fed Reserve? Are they going to continue on with the aggressive rate hikes, that 50 and 75 basis point rate hikes? Or into 2023, will they slow down, right? Scale back on interest rate increases? Are they going to only do 25 basis points? And also the main question is the terminal rate. What we call terminal rate is the interest rate, the highest interest rate point. Where is the terminal rate? Are they going to be stretching it out for a longer period of time? Okay, so at this news event, it's not so much about that 50 basis point rate hike. It is more so about the scale of future rate increases and at which point is the terminal rate expected for the US. I'll show you here that you can see on the 3rd of November, the US actually, or the Fed Reserve, took interest rates higher by 75 basis points from a 3.25% to a 4%. And what happened on the 3rd of November? When we look at the dollar index, scrolling back, I have that line there. Okay, show it to you here on the news release, 3rd of November at 3 a.m. It barely moved before. Wait, was it at 3 a.m.? Okay, should be at about 3 a.m. So 3rd of November at 3 a.m. There we go. Okay, so this was at the 2 a.m. mark. So this was before daylight saving. We actually saw, what we saw was the dollar weakened before pushing back up and then turning back down again, right? So 75 basis points rate hike was a little bit of a surprise, right? It was a bit of a surprise. You can see, although it came out as forecasted, but they didn't expect such a big, there was some talk about a slowdown at that point in November already, but it came out bigger than expected. So we actually saw the dollar index fluctuate at this level, right? Between 111.50, about 11.50, all the way down to 110.45. And then the next hour pushing back up because of the conference. They were talking about terminal rates being higher. They were talking about being uncertain about further scaling back. So we saw that push up, right? Following on from that, what we actually saw was that there were further talks about a slowdown in rate increases. And then that's why we saw the dollar index push back down towards that 109.50 support level. Okay, so just look at what happened here with the news increase between this 2 points, so about a 24-hour period. It shot down very briefly before trading higher again, and then after that coming back down. So because of what happened here on the 3rd and 4th of November, what I'm anticipating at this point, right now it is tracking lower, but what I'm anticipating onto, let's say we move to Thursday, Thursday at about 3 a.m. there, I'm thinking that we could see price trade up. All right, I'll bring this down a little bit. We could see price trade up, hit that 105.63 level, and then turn back down again. All right, so I'm still looking for it to now it's dropping. In the short term intraday period, it might drop before turning back up again, right? Testing that resistance level of 105.60. And then with that news release, right, we could see it push back down again towards that 104.20 key support level, as you can see here. All right, so very similar. I'm expecting a very similar move to what we saw on the 3rd of November, a push down, spike up again, and then after that, an overall trade towards the downside. If I showed it to you on the H4 time frame here, right? Oops, take that away. At a similar scale, we're looking for this to come down, trade back up, test that level before turning down, or if in a lead up to this news decision on Thursday, we could actually see it come up, break above that resistance level. It could trade up towards 107 before turning back down again. All right, so very similar to what happened here. You can see that on that news release, we actually saw price go up a good almost 200 pips towards the upside. Very similar here. If it does break above this point, then we could see price go up almost that, maybe not that much, right? To that 107 level and then turn back down again. Okay, so it all depends on the dollar index. The way the dollar index is going to move, it all depends on the news to be released on Thursday with the interest rate decision, and also the statement that accompanies it. Are they going to be talking about further rate increases being more aggressive, or is it going to scale back, slow down? And also, what is the terminal rate? Okay, so quite a big news event there from the US on Thursday at 3 a.m. With that said, we do have some GDP numbers to be released for the Kiwi and employment numbers for the Aussie. I don't think this will move prices too much after that possible big fireworks on Thursday morning. But for the rest of Thursday, it's going to continue on being high volatility events. Why so? It's because at 4:30 GMT plus 8, we do have the Swiss National Bank, SNB, Swiss National Bank, with their interest rate decision, again, expecting rates to go up by 50 basis points from a 0.5% to a 1%, right? So looking at rates to go up by 50 basis points for the Swiss bank from the Swiss National Bank. What this means is that, you can see the last time it happened, when they did a 75 basis point rate hike in September 22nd. Looking at the Swiss franc on September 22nd, when they actually increased rates by 75 basis points, we actually saw the US Swiss franc push up, right? From this 0.9655 level, push up quite strongly all the way towards the upside. So what could we expect here with the most recent move is that recent price volatility on the US Swiss franc is highly dependent on the dollar index, and that's why you see it coming down right now, testing to test this 0.93 support area. What I'm looking for, slight revision of what I was previously analyzing, is that we could see price trade lower, maybe bounce back up, back towards that support turned resistance level. And if it does break above that point, then we could see this push up from bouncing off a very strong support level from 0.93, possibly back up towards 9450, and with the next key level here at 95 or almost at 96, 0.96 level. All right, so we're looking for that possible push back up with the Swiss National Bank's interest rate decision likely to have pushed the US Swiss franc towards the upside. Question here is I trade only the pound yen. What should I focus more on? Definitely focus on the pound dollar, right? So I'll show you as we looked at the pound dollar news, focus on pound dollar news. As we looked at the pound dollar pushing towards upside, what you'll notice here on the pound yen, it does have a lot more volatility. We do see it pushing up, following a similar trend to the pound dollar, pushing higher. At this point, as I zoom out a little bit, you can see that it is within, quite close, within touching distance of that 169 round number resistance level. Okay, so what I'll be saying is, or I'll be thinking is that the pound yen could continue trading higher, especially if we see the pound dollar continue to trade higher as well. All right, I hope I answered your question there on the pound yen. Right, so I would continue, and you can see that if I did this, we do have an upward channel towards the upside, looking for it to come up to test that resistance level. What happens when it gets to 169? Just be extra careful. We can see that the last 2 times it hit or touched that 169 level, we saw a big, strong, relatively big, strong downward move. So what we could see now is for it to test 169 and then a rejection for the big, strong downward move again. All right. With that said, I lost my train of thought. US Swiss franc, looking for it to push towards upside. You're welcome there. Okay, so that was the US Swiss franc with the Swiss National Bank interest rate decision due at 4:30 GMT plus 8 on Thursday. Following on from that, another central bank with their interest rate decision. The pound, or the Bank of England with their interest rate decision, looking to take rates from a 3 to a 3.5%. Right? So increase interest rates from the UK from a 3 to 3.5. So this is why it's really important that we're going to see that CPI data for the UK dropping slightly, because it's going to give the Bank of England that confidence to try and push interest rates higher again, so that they can actually have that chance to bring inflation back down. All right. So with that, from 3 to 3.5%, again, you can see that last time it did on the 3rd of November, looking at the pound dollar on the 3rd of November, when the increased rates, we actually saw the pound dollar push towards the upside. So what I'm looking for here is that the pound dollar is already on its way up. It's already on its way up towards this 1.2340 resistance area. By Thursday, I think that it could continue climbing up all the way through to Thursday. If it does break, my main attention here is what happens at this point. If it does break above this resistance level, then hey, we could see the pound dollar trade up towards that 1.2655 resistance level. Okay, zooming out, going to daily chart, zooming out, you can see that that's the previous swing high level. Okay, but it's possibly not going to get there in one straight move, right? You can see that even in the November move, it shot up, retraced before shooting back up again. At this point, what you want to note is that it could get to that 1.2655, but there is an interim level at about this point here, at about this 1.2450 level, okay? Because of the previous swing levels here and also here. All right, so we could see price back to the H4 time frame, trade up, trade up towards this 1.2450 level. And if it breaks that, then it could continue up towards that 1.2655. So coming back to your question on the pound yen, on the interim, in a shorter term, we could see it climb towards this 169 level. We might see it retrace back down, similar to what happened there. But if the pound dollar does continue to climb quite aggressively, similar to what happened on the 3rd of November, or if it breaks above the resistance to climb, then we could see this move. Right? We could see this move. So pay attention here on the pound yen on what happens at 169. Right? Pay attention to the price action there on the pound yen. If it rejects that 169, we're going to see that downward trace back towards this key level here at about 163.85. If price breaks beyond this resistance level, then it could trade up towards that 172 level, right? And you can see that when it gets above this 169, to climb to 172 can be quite a aggressive climb towards upside, right? If I switched it to the daily time frame, you can see that 172 is a pretty much historic high level. Zooming out further, the last time we came to 172 was back in January 2016, right? It was back in January 2016. So just be extra careful if you anticipate for price to break and climb towards the next key resistance level, historic high levels at this point. Okay. Any questions so far? All good? Any questions? Let me know, put it into the chat. If you've got no further questions, then the next one, the next central bank with another interest rate increase is the ECB, the Eurozone main financing rate looking to go from a 2% to a 2.5%, another 50 basis point rate hike. But I don't think this will be as straightforward because there has been a lot of talk about the ECB with their interest rate decision. 50 basis point is somewhat expected, but there has been talk about possibly even a 75 basis point rate hike. So we're looking at least 50, possibly even 75. If that does happen, then we're likely to see further or more aggressive push towards the upside on the euro dollar. Use Elliott wave on pound yen. I see it's on its third wave. So when you say that, what are you looking for in the short term and what are you looking for in the, what are you looking for in the short term and longer term? And also, are you a, shorter or longer term trader? Because I do know that, some people use Elliott wave and sit out and wait for the whole wave to complete before getting into a swing trade. And there are other traders who would use Elliott wave for day trading, just trying to catch the different wave levels. All right, so you do day trading. Good stuff. All righty. All right, so looking at the euro dollar here, 50 to 75 basis point rate hike, what it means here on the euro dollar. Okay. Zooming in a little bit. Right now, pushing higher, right now at 1.05, almost 1.0550, looking like it's climbing to test this 1.0583 resistance level. Okay, so didn't drop as I expected, but it's pushing up like what we're looking for. Okay, so at this point, I'm still looking for it to climb up. I was actually trading just before this session. On the euro dollar, I got in about, so this was 3 o'clock. Yeah, 4 o'clock, I got in right there because I saw this finding a relative support at this 105 level, right? 105 was just there. So I saw that it failed to break, or it struggled to break above 105. And then as price climbed, right? As price climbed towards the upside, I saw that push up and then a retest. So I got in at about this 105.25. I got in at 105.25. About there. All right. My stop loss was 30 pips. And then my take profit was 30 pips as well. So I was looking at a 1:1, the quick scalp. I got out just before this session, just because I wasn't going to trade while I was doing the webinar. So, quite happy that that move happened. I think I got out at about 20, 25 pips, if I'm not wrong. So at about 25 pips there. All right. So it retraced back down before now looking like it's pushing back up again. So anticipation here, back to the H4 time frame, is for the euro dollar to continue pushing higher, continue trading higher towards that resistance level. Most likely, based on the current price action, if it breaks above this resistance level, then we're going to see possibly the euro dollar on Thursday trade significantly higher towards this 108 resistance level. Okay, but just be extra careful on what could happen here, is because over the last week, it came up to 105.85, tested the level and rejected trading back down again. Okay, so look at what happens. Look for it to break above that resistance for that big upward move, especially with the ECB interest rate decision to be released on Thursday. So as I promised you, a lot of news to be released this week, right? We have the ECB interest rate decision. First surprise will be, or first thing to pay attention to will be, are they doing a 50 or a 75 basis point rate hike? And then the second thing to pay attention to is during the press conference, are they looking at more aggressive interest rate hikes, right? Comments about further interest rate hikes and the scale of further interest rate hikes. So sometimes what happens is the first move happens with the data release and the statement release, and then it retraces quickly before the second move during the press conference. All right, so just be extra careful if you are going to be trading this news event. With that, following on from all that big firework news, we do have US retail sales data to be released. US retail sales month on month, not looking very good. 1.3, expected a small drop to minus 0.1. Core retail sales from 1.3 to a 0.2. So looking at a small slowdown in retail sales number, a little bit of a surprise given that traditionally in December, we do see retail sales number for the US climb because of Thanksgiving, and also in the lead up to Christmas, retail sales numbers typically climbs. And also is also the what was that? Consumer sentiment on Friday last week, that we saw positive consumer sentiment, so we could see this push towards the upside as well. So I'm actually somewhat anticipating a little bit of an upset, a surprise here on the retail sales data and core retail sales. We could see stronger number compared to what's expected, right? Stronger number compared to what's expected, which again could strengthen the dollar or the US dollar and the dollar index in general. So again, back to this point, right? The dollar index could on Thursday trade lower back towards the 104.15 level, but then with the retail sales number, we could see this push back up. Okay. Alrighty. No, Trong, I didn't miss your German index. I was just going through the currencies first, and then after that, we look into the index. So because it helps when you look at the currencies, it does give you a little bit of a hint of where the index could be heading. So I haven't missed you out at all. Not a worry. Okay. So now that I've covered all those news, right? We went through a lot, went through all that news. ECB press conference being the last one on Thursday. On Friday, we do have a whole bunch of PMI numbers to be released, but I don't think these will be big price movers following on from what just happened or what would have happened on Thursday. The last one to pay attention to will be on Tuesday next week, where we do have the Bank of Japan with their monetary policy statement and press conference. But we can always look at that next week after prices have moved from those Thursday fireworks. All right. So now looking at the German index, right? So German index, I typically would do it on for the index, I typically would do on the daily time frame. All right. And as I zoom out, you can see that we found a good, strong resistance here at that 14,652 level. The last time we got there was on the 1st of June, was in June, where it tested that level and then rejected to push towards the downside. Again, right now, testing came close to that area. Testing that area, I think that it could have one more test before turning back down. You see, if I drew that right across, it tested once, tried to break out, came back down, tested again. So we did have several tests before that big retrace. So I think that currently, as it's trading within that tight range, price could trade back up. Oops. Price could trade back up towards that 14,637 or 635 level. I'm looking for it to test, possibly even break beyond, but retrace back down. And this move lower could also be driven by the ECB press conference on Thursday. If we see the euro dollar strengthening quite significantly, that could have an impact, or most likely will have an impact on the German 30 and also the other indices as well, right? So at this point, what I'm looking for in a shorter term or shorter to medium term is for that move currently at 14,338 to push up towards maybe that 14, I would say even possibly that 14,800 level before trading back down again. You can see overall, I don't see a big reason why it should clear above 14,800 to trade significantly towards the upside. I think that we're more likely to see it test and then reject back down again. Alrighty, Trung. How you see your chart is so simple but good. There's so many confusing stuff like smart money, liquidity, and change of character. How do you think about these? It does work. Smart money concepts, change of character, liquidity areas, all that works. It's also, it's not very dissimilar. I do have a colleague who does those methods. And what we actually found was that as I'm identifying key levels, it does align somewhat with the smart money, liquidity, and change of character price levels as well. So it's really what fits your eyes, right? What fits your eyes, what fits your trading methodology. And if you're trading based on the Elliott wave, then looking at it on the bigger time frame might help. Sometimes what I feel is that the smart money concepts might be looking at it a smaller time frame, which might be a little bit confusing. So if you can apply it to the bigger time frame, hey, that would be even better. All right. I don't believe that through my years of trading, I don't believe that there is like one surefire strategy or method that everyone has to use. It all depends on several characteristics your trading risk appetite, how much time you get to spend in front of the screen, what kind of trades you're more comfortable with. I know traders who would only do scalping trades or intraday trades, and other traders would not be able to do short term. They'll only be doing swing trades. So it's, find a method that fits your lifestyle, fits your capital amount and your risk appetite. I think those are more important than finding that new strategy that's going to work or could work. All right. So yeah, I do tend to keep my method a little bit simpler. I look for first the news on what could happen, where could prices move towards. Then I look at the charts to identify trend following. I do prefer trend following scenarios. So I look at trend following scenarios before getting to a trade, right? A reaction of a key level before getting to a trade, either bouncing off or rejecting or bouncing off a level or breaking through a level to identify as a potential momentum trade. All right. At this point, any further questions? So what I'll end off with is gold. All right. So gold, I'll take these lines away for now. So what was very interesting with gold is that it does have a somewhat inverse relationship with dollar index. So as we saw, it came up, tested that 1810 area, 1810 to 1804 resistance area, turning back down. But recently, or just over the last couple of hours, we've seen the dollar index weakening. So that's why we see that slight push towards upside again. Overall, what I'm looking for gold, it could continue at this point climbing towards the upside. But in general, I think that we're still looking for it to come down to test that support level before bouncing back up again. All right. Gold has been on a very strong upward climb since the early November, right? Since early November, we saw that upward climb. And more recently, you've seen it being supported in that upward channel as well. So I'm looking for it to test and then possibly turn back down. So better representation of this would be for it to test and then to reverse back and then bounce back up again on gold. Okay, breaking that trend line. What do you think? Which news this week has the most impact for the week, or if you can possibly for the rest of this end of the year? Hey, I just did it. These are the news on Thursday. I wouldn't be able to split the difference between the news on Thursday, but the US FOMC, the Swiss, the pound interest rate, the euro interest rates, those will be the three big ones to focus on for this week and possibly for the rest towards the end of the month and the year. Because as I scroll through, you can see on Tuesday next week, we have the Bank of Japan with some interest rate, their policy statement and press conference. And then the CAD with their CPI data. But after that, right, not a lot of news all the way through to the bank holidays towards the end of the year. All right. So all the way through to next year. I hope to see you all next year again. But yeah, all the way through to next year, then we'll start looking at the news come back into play. All right. So I believe this week on Thursday will be the last big hoorah, the last big volatile market scenarios for now all the way to the end of the year, towards the end of the month and towards the end of the year. I think that unless we see some big surprises here, we're most likely going to see this news lead to a trending scenario and then markets consolidating towards next week and into the new year. All right, hope I answered your question there, Trung. Hey, Dr. Waguma, how you doing? Any last questions? Any further questions? All good? All righty. Okay, so if there are no further questions, what I'll do a quick reminder for everyone is that please remember, trade well, trade safe. What I'm for myself, I'm approaching this market short term. I'm looking at short term moves, intraday moves, looking to realize my profits quickly because there are a lot of news to be happening. You never know when there is going to be a surprise and a big spike or a big surge. I wouldn't suggest that swing trading would be the best thing for now. I think there will be shorter term sessions or shorter term trades just so that you can catch the short term moves. All right. If you have missed, hey, if you have missed most of the session, you can rewatch it on YouTube. It will be available on YouTube. So please do rewatch it. If you have already watched this session as well, you can catch up again in case you missed out any points. With that said, I wish you all a good new year. Good Christmas. Trade well. Thank you, Stephen. Trade well, trade safe, and take care now. Bye-bye.